By the end of this video, you have a tool that will help you grow your account with an equity curve like this one. Sit back, relax, and learn something new. Trading is a stressful business. Most trading losses comes due to emotional wreck. Most trading strategies are profitable, but their efficiency is killed by people like you and me, the executors. However, we managed to automate 3 powerful trading strategies from the institutional market maker method, and these are peak entries, where we actually managed to derive a formula which uses the average daily range to see the end of a cycle. We know that peak entries comes after 3 levels of drop. Our robot can actually count these levels using the ADR, or average daily range, from the previous daily flows. After that, it will be able to enter only if there is a double bottom or a W pattern, which actually uses EMA crossovers within these leg formations. And this apex, or this neckline, will need to be at the 50 EMA. If a candlestick reversal pattern comes in the second leg, we will enter the market. Say we have failed, or the market has not issued the exact pattern that we are looking for, this robot will actually be able to catch an entry as a safety trade. Safety trade is basically a W on an M pattern that comes after the peak has been issued. After that, let's say this has failed again. We'll trade at the breakout, whereby the market has changed trade and it is broken out from the downward profile to the upward profile. We can enter at that particular phase. So basically, these are the three strategies that we automated, inputted into our program, and ran them. The previously mentioned entries were actually automated into a trading EA, which can make these with consistent. Our sophisticated EA or robot can scan pairs, metals, and cryptos with rules in place. Let's have a test of how it works. Alright, so this is MT5, where our EA works. The name of our EA is NEX, N-E-X, right? So we are going to test firstly on pound against dollar, then we're going to use crypto BTC USD to see how it works and how it takes the trades. On next EA, we go and test. Right, so we've said we are going to use Forex, which is pound against dollar. Then our time frame is going to be 1 hour. And then we are going to test on H1, our deposit. We are going to use a deposit that is within reach to everyone, which is $250. And then that is what we are going to use. Then our inputs for this particular trade, we are going to have a little bit higher risk. So we are going to say maximum number of open trades per day is going to be 2. Time frame is going to be 1 hour. Our lot size, we are going to use fixed lot because we can calculate the lots of pound USD, right? So for fixed lots, we are going to use a lot size of 0.5, and then our stop loss is going to be a fixed stop loss. Pound USD is actually a high volatile pair. We are going to have a fixed lot, fixed stop loss of 50 pips, and then our take profit should be on a reward to risk of 2, which is this one. All these are actually available as settings for each and every pair, so that if you want to have this EA for your side, you can actually learn through. After setting all this, let's now start the test. Of course, the test will take a little bit of some time, but I've tried to actually have a lesser portion so that we won't have an hour's long video, and we'll be able to actually see whilst it actually taking the trades and where it takes the trades as well. So the test is almost over. The test is over, and we need the results. Firstly, the back testing results are these ones. we can see that the initial deposit was $250. We actually tested it in a period of the first month of 2023. In this case, it's January, February, March, April, and May. Right. So in this January, February, March, April, and May, we can see that our initial deposit was $250, and after our net profit from January up to May, it was going to be $620, and this was the gross loss and the gross profit. So our account balance was going to be at 620. Some important parameters from this is how many consecutive losses. The consecutive losses for this period was actually 3, and then this was how the distribution of the profits within the months. Of course, like any other trading month, we can see that not each and every month will be profitable, but we'll need more months that are profitable. January, we had a very high profit of around $450, and then in February, it was actually a small loss. We can see the loss in red and the profit in blue. Then March, April, and May were profitable months, and then our equity curve went up like this for this particular pair. So basically, that is how this EA was going to behave. And what is also important, let's have 1 month of seeing how it was going to take our trades. Let me remove all these stuff so that we can see how it was going to take our trades. Right, so the first trades that were taken was actually trades in January. We can see that we had sell. It was a sell, and a take profit at this particular point. Sell, a take profit at this particular point. Mind you, we have set to maximum number of running trades per day to 2. So these were 2 trades, 1 trade. Sell, sell, sell at these safety points, and then other trades, we can see these buys, buy here, buy there, and that is how it actually takes the trade. This was actually a losing trade because it was a buy and it ended at this particular point. So basically, that is how it actually worked out on GBP against USD.